let's talk about Bitcoin, right? What is Bitcoin? It's not digital currency, it's digital capital. What is the use case of capital? Wealth preservation and growth. Why is Bitcoin digital capital? Well, because it is a crypto network backed by digital power that's capped at 21 million, that's universally embraced as a commodity, not a security, not a proprietary token, that's beyond the control, corruption, or censorship of a government, a corporation, an individual. So it is a crypto monetary network. It went from nothing to 2 billion to 20 billion to 200 billion to 2 trillion. It's been growing more than 60% a year for a decade. What's my forecast? My forecast, it will grow. It'll decelerate from 60% to 20% over 20 years, over 21 years. Why 20%? Because the cost of capital, the S&P is growing 12 to 15%. Bitcoin's going to be about 50% better than the S&P. Why? Why is it going to be 50% higher performing? And why? And by the way, it's going to go from 60 vol, 60 AR to 20 vol, 20 AR. Why will it be more volatile than the S&P index? Why will it be higher performance than the S&P index? Because Bitcoin strips the risk off of all physical real estate. So if you wanted to hold real estate as a long-term store of value, you know what happened in LA, you know what happens with hurricanes. You get fires, floods, you get rent control, you get politics, you get expropriation. What's your real estate in Nigeria going to be worth when the currency goes to zero? So it strips the real estate risk off of tangible property. It strips the currency risk out of securities. Like I give you every single company in Africa, what's it worth when the currencies go to zero? Or you can own anything in Argentina when the currency goes to zero. Your bonds, your securities, all these things collapse because they're all currency derivatives lightly constructed. So Bitcoin doesn't have counterparty risk like a security or a financial instrument. It doesn't have physical risk. And finally, it's literally without counterparty risk to a creditor, a culture, a country. If you're owning Picasso's, you have counterparty risk to a culture. If you think you're insulated because you own the Patriots, you have counterparty risk to a different culture. So you don't want to be counterparty to any political entity. You don't want to be counterparty. What iPhone are you on right now? Is it like the 16 or the 7th? Like, what about the iPhone 99? Okay, well, here's the thing. In the year 2100, Bitcoin is going to be 1/21 millionth of all the money in the world. That's never going to obsolesce. In 1,000 years, you're going to want to own 1/21 millionth of all the money in the world. But in 100 years, it's not clear what product or service you buy today you're still going to want. So Bitcoin is like, the whole idea is I have an investment of capital for a long, long time without counterparty risk to anything, any company, any idea. And if you combine that, which makes it higher performing, with this other idea, which is that it is unregulated, you're trading it on 1,500 exchanges, 24/7, 365 everywhere in the world. So on Saturday night, if you need $1 billion of credit, you can get $1 billion from the Bitcoin network if you want to pay the right amount. If you want 100 to 1 levered bet negative, you can actually either you can place $1 billion bet in a minute, you can extract $1 billion of credit. So it is a monetary network that's giving you leverage and liquidity. Like literally, it traded like $100 billion in like 48 hours over a weekend or something. It is the most, everybody says, what's it good for? It's the most useful thing in the world if you care about money, because what it's good for is unlimited leverage and unlimited liquidity everywhere at all times for, in theory, 400 million counterparties, right? Anybody can jack into the network and trade peer-to-peer or via these crypto networks. So my view of Bitcoin is it's digital capital. And my forecast is it'll just decelerate from 60% to 20% as it goes from 2 trillion to 200 trillion.